So leading economic indicators are starting to flash even further warning signals about the global economy, and this is translating into the stock market. So this is going to be the worst year for the stock market since 2015. From a modern historical perspective, since the Federal Reserve was created, basically there has been a stock market crash almost like clockwork every 7 to 9 years. The last 10 years of this bull market were pretty much the anomaly. So I'll talk about some of this stuff in current events, and we'll go from there. I got some other comments. What the? Okay, the stream is resumed. That was weird. I do not know what happened there. Okay, so now that we're back, stupid disclaimer, anything I say on here is for informational and educational purposes only. I'm not a financial advisor. You should talk to your financial advisor before investing or trading. They will probably try to get you to buy GE stock. They will probably get you to continue to buy the dip, just like the talking heads on CNBC are. Even though a lot of those FANG stocks and some of the other stocks are down more than 20% in just the last 3 or 4 months, they still bring on a lot of the same people almost every day when these same stocks go down 1 or 2%, telling you to continue to buy the dip. And you know what? They're not going to admit they're wrong. They're not going to give you an apology. And that's just how it is. That's just how the system is rigged against the retail investor, unfortunately. Actually got a funny story. It's, well, kind of funny, but also best case scenario, it's extremely unethical. Worst case scenario, he definitely committed a pump and dump crime on live TV a bunch of times, and he's looking at prison time. Or at least he should if we had rule of law. So I'll talk about that later in the show. Okay, so the stock market right now, when we're doing this live stream on Tuesday, December 18th, I also have a couple interviews coming out later this week with Phil Kennedy of Kennedy Financial and Danielle DiMartino Booth as of right now. So I'm going to get you guys 3 Christmas presents of content before Christmas Eve and Christmas. But the stock market has been sputtering, so it did drop below key support levels on the technicals, and if that continues, you're going to see the managed money, the institutions, the hedge funds, the high-frequency traders, you're going to see them basically indiscriminately, with no emotion whatsoever, just dump shares, just sell positions, and some of those guys will even go short. This is just how these guys do things nowadays. It's basically, if it drops below key support levels on certain charts for the either S&P 500 or the Dow, the Nasdaq, or the Russell 2000, you're going to see just basically forced selling, whether the people want to or not. So things are turning bearish. We did have a little bit of a stock market rally today. In certain stocks, we had a lot larger rally than others. Olive Garden, or Darden, well, Darden, which owns Olive Garden, reported better than expected news. That gave a lot of restaurant stocks, even the really crappy ones, probably because it was a temporary short covering rally, it gave them a bump. Some of them were up like 4 or 5%. Darden popped at one point today. It was almost 5% pop. So there was probably a big amount of short interest. The dollar index did drop below 97 temporarily. We'll have to see. It's too early to tell what's going to happen with that. But based on some of the other evidence I'm going to talk about, I would say that the dollar rally is probably not over, because with leading economic indicators and some of the companies that are reporting now for their Q3 earnings, and it looks like that things are going to continue to get worse in Europe, and the global economy is slowing down. So FedEx, the VIX is also up to 25.58. That's up over 4% today. Okay, so leading economic indicators. So FedEx reported earnings today. FedEx, for those of you who are not familiar, it ships goods for consumers and businesses all over the world. So a lot of investors or traders consider it basically a leading economic indicator, because if the CEO or management team of FedEx says that goods are slowing down to a certain country or certain part of the global economy, or they say overall that goods shipped has slowed, then that's a warning sign. So that's going to translate to a lot of other people, a lot of other businesses, a lot of other people. And basically, FedEx, I think they beat top and bottom lines. Yeah, they beat on top and bottom lines, which is not really that hard anymore with financial engineering. You can beat by a penny. It's not that really hard to jigger things to beat by a penny. But more importantly, the comments were in the guidance. And so this is what the chief financial officer of FedEx said. I'm going to quote him. So while the U.S. economy remains solid, our international business weakened during the quarter, especially in Europe. We are taking action to mitigate the impact of this trend, though, through new cost reduction initiatives. So, you know, I've been warning people about Europe for a while now, but it looks like even FedEx is saying that whether it's Germany or a lot of the other countries in the European Union, the United Kingdom, things are slowing down a lot in Europe. Probably by definition, too, I would say that's related to China, because a lot of European companies, especially ones in Germany, do a lot of business in China. So I would also say that a China slowdown is also impacting Europe a lot as well. So the other interesting leading economic indicator that I saw, you have to be a Real Vision television subscriber. This is great, though. I may reach out to this guy and try to get an interview with him. So his name is Paul Hodges. This was a hidden gem of an interview. It was on December 3rd, earlier this month. It was only 28 minutes long on Real Vision TV, and he's the chairman of International eChem. And basically, he's had a lot of experience working in the chemical industry, oil and gas, and also finance. And so basically what they were saying is that chemical demand for a lot of different industries, demand for chemicals, different types of chemicals, whether it's automobiles, housing, electronics, and other industries, that demand for chemicals is a leading economic indicator. And so basically the stuff he was saying, and I thought this was a great interview, one of the best ones I've heard on Real Vision television in a while, like I said, a hidden gem. And he said that the demand for chemicals out of China, demand for chemicals in the automobile industry, demand for chemicals in housing outside of China, Chinese housing is also bad, and demand for chemicals in electronics has been drastically reduced. So basically, he's saying that either the global economy and these other industries are either already in recession or about to enter one. And he was saying for the first time that he can remember that smartphone demand is basically oversaturated and in a bear market. Same thing with so semiconductors too. So their demand for chemicals is also down. Hey Mark, I would love to end the Fed, but unfortunately, I don't think it's going to be ended anytime soon. In fact, a lot of Americans, and I'll talk about this a little bit later in the show, would probably welcome even more intervention because they're not libertarian, they're not free market. Even a lot of Republicans are cool with the Federal Reserve. A lot of Republicans still believe in big government. They want their big foreign policy expenditures and military expenditures funded. It's the new normal we're in. And we got warnings from Jeff Gundlach, who's a big bond king. He also owns a lot of gold stocks. So Jeff Gundlach thinks that the S&P 500 is going to see new lows eventually, and he thinks a bear market has started. Jim Chanos is worried that the stock market is reacting so much to so little interest rate hikes. But I mean, everything is so leveraged, right? So no lessons were learned after the 2008 financial crisis. Everything was papered over. Global debt has increased massively, it's doubled globally since 2008. There's been over 100 trillion more in debt, I believe, since 2008. So the lessons that should have been learned in 2008 when the governments bailed out the banks and a lot of other private sector companies were not learned. Okay, so I think I covered pretty much all the leading economic indicator talk that I wanted to cover. Oh, the other thing that worries me that I'm looking at now is the oil price. So I saw someone mention that in the comment section. So let me pull up oilprice.com real quick. We are at WTI 46, a little under 47 a barrel, and Brent crude at $56.26. So these are really bad oil prices. These are good oil prices for consumers in America, especially American consumers, but these are very, very bad oil prices for the industry. Those are oil prices where the deep water offshore oil producers, especially the higher cost ones, and a lot of the deep water rig operators, the drillers, they're gonna have to charge a lot less money And some of them are even potentially, if the oil price stays this low for quite a while, they're potentially going to go bankrupt. So I wanted to talk about that briefly. So Parker Drilling, when I was an oil analyst about 5 or 6 years ago, Parker Drilling was a pretty well-respected company. I believe they just filed for bankruptcy in the last couple weeks. So they had a material with this crash in oil prices. It really affected their business. I think they had onshore and offshore drilling. And Transocean, I talked about them last month, how the oil price, how their stock was down a lot. But another company that may interest you guys is Seadrill. So SDRL, they reemerged. They were one of the largest deepwater offshore oil rig companies for drilling. And they reemerged from bankruptcy over the summer. And I had been covering that stock. I covered it about 6 years ago when I was an oil analyst at Investing Daily. And, you know, they were paying me to do this. I didn't want to do this, but they were paying me to write research on them for, like, some of the other newsletter writers. And they were telling me, like, that Seadrill was a buy when Seadrill had a 400% dividend payout ratio. Do you guys know what that means? Literally, Seadrill was borrowing lots and lots of debt to run their business and also to pay their dividend. So Seadrill at one point about 6 years ago, they had a 400% dividend payout ratio, just an insane amount. And at Investing Daily, it was a long. They were considering a long, and I was like, are you guys kidding me? They're like, no, just shut up and write the article. Just write the research and write the articles. So Seadrill went bankrupt, and, you know, normally bankruptcy is considered long-term healthy for some companies, but the Seadrill, which is Sam, David, Ralph, Lauren, I believe is the new symbol for the new Seadrill, that has reemerged from bankruptcy. It looks like it's got way too much debt still. So the current Seadrill that has reemerged from bankruptcy could be in trouble as well. They have, I believe, last time I looked at an article last week on the new Seadrill post-bankruptcy. So they have around $187 million per year in annualized cash flow, but they have $5 billion in debt. So their EBITDA to debt ratio is 50-1, which is not really a healthy EBITDA to debt ratio. Not that I like EBITDA, right? Because remember, EBITDA isn't real earnings. So that company, the debt to equity is bad on Seadrill, on the new Seadrill, and the EBITDA to debt ratio, even though the $5 billion in debt is supposedly secured debt, but in a bear market, I really don't like what the bankers and the other people decided to do with Seadrill's balance sheet and their assets when they reemerged from bankruptcy. So I don't think they were given a fair chance at success with that. There should have been less debt on their balance sheet. It should have been more reasonable. They should have allowed them to keep more assets for cash flow. The current Seadrill that has reemerged from bankruptcy does not look as good. So we are at an oil price. If you want to look at the U.S. shale oil producers, you have to see which ones are hedged and for how long. Because this is an oil price that, like, only 3 or 4 years ago, it bankrupted Linde Energy. So the oil price was going down to here, and Linde Energy was hedged, I think, 3 years out, but they had so much debt that eventually those hedges started to roll off and they got in trouble. And I think a lot of those other oil producing MLPs, master limited partnerships, I think pretty much all of them after Linde Energy within like about a year to 18 months all went bankrupt. So they were paying out these enormous distributions. They had very leveraged balance sheets. They were telling the market how well hedged they were for years in advance with oil and natural gas, their production, and it still didn't help them. So this is an oil price that is not really good for, you know, well, we do have national oil companies, as I've explained before, will probably maintain oil production. But private sector oil companies, this is not really a good price for them to want to continue to bring on oil production. Now, if some of them are trying to avoid bankruptcy, they're not going to cut production because they need the cash flow. But if their balance sheet is okay and they don't have too much debt and they don't have a lot of hedges to deliver into, then they should consider not producing as much oil at these. Best oil plays. Well, I can't give financial advice by 100-ounce silver, but Chevron is a very safe oil company. They have really solid, they just increased their free cash flow. So Chevron would be a safer one. On the oil side, if I was managing money, not financial advice again, if I was a hedge fund manager, I'd probably be short a good amount of these oil plays. Like Petrobras, which is always corrupt and normally a high-cost oil producer. If the oil price does not rebound soon, some of these deep water offshore drilling companies could be in big, big trouble. Transocean may be one of them. Because normally with these deep water offshore drillers, when the oil price drops this low to keep their rigs operating, to maintain their cash flow, they have to offer a lower price. And you know what? The debt on their balance sheet that they're using to fund these rigs that they bought, or upgrades to upgrade new equipment for new rigs and things like that, the debt doesn't change, but their cash flow just dropped a lot because they have to drop their price. So that's when they get in trouble. Is their cash flow, because they have to maintain or keep business, they have to drop their prices a lot, and they're stuck with the same amount of debt. Chevron has high quality free cash flow, not a lot of debt. Their dividend's healthy. They have good natural gas production too. Chevron's the safest of the majors. They have been playing less games than ExxonMobil and Royal Dutch Shell with the share buybacks and using debt to pay the dividend and stuff. Okay, take a look at my notes here. So in general, if I could summarize the beginning of the show for those of you guys who missed part of it, it's an anomaly in the modern era with the Federal Reserve and other major central banks for stock markets to rise 10 straight years or more without a crash. Okay, since the Federal Reserve was created, almost like clockwork, there has been a major stock market crash every 7 to 9 years, and we're past that point. So that's why, things were getting kind of dicey here. Now, if central banks reverse course, if the Fed on the rate hike maybe doesn't do the rate hike, we'll see. I think we'll have to see. Danielle DiMartino Booth on her Greg Hunter interview and elsewhere, she thinks for sure that Jerome Powell is not going to be bullied by Trump, and that he will do the rate hike in a couple days. So we'll see. But that's going to cause even more problems, especially for a lot of subprime auto and credit card companies and restaurants and retail, I would expect. It doesn't look like we're going to get that Santa Claus rally, not when you have companies like FedEx and others reporting bad news. There would have to be a retailer, maybe Amazon, someone big, reporting really, really good news for that Santa Claus rally. But yes, historically, we do have a Santa Claus rally. CNBC, the talking heads are on CNBC saying we're going to have a Santa Claus rally. They're trying to talk it into existence. Meanwhile, they bring on the same pumpers every day that are telling people to continue to buy the dips in certain stocks, and the certain stocks keep falling. Hey Kip, actually I was going to cover that. During the show today. I was going to give my response to the Jose Nino interview that I released over the weekend about, him escaping socialism in Venezuela, Hugo Chavez. Okay, let me just check my notes and make sure that I covered the stuff, and then we'll move on to the next topic. Okay, so I think I got everything covered for the stock market that I wanted to talk about. I would watch key technical levels, but basically if it gets to certain technical levels and certain support levels in the stock market are broken, there will be increasing selling. It will feed on itself. It will become a vicious cycle. And it's funny how you have Steve Mnuchin now and a lot of the other talking heads from the US Treasury Department, from mainstream financial media, talking heads now blaming the high-frequency trading computers and the trend traders for, selling stocks now when, that's what they were doing when the bull market was going up. They weren't selling stocks, they were jumping on the trend, and they were going long stocks like they were not really paying attention to fundamentals. They were all looking at momentum and technicals and trend. And any headlines or press releases that the companies put out. Okay, so I want to give my comments now on the Jose Nino interview. So I was kind of surprised to see some of the comments in the comment section below the Jose Nino interview about, pro-socialism. I think there's a misunderstanding about the history of the United States. So really for 100 years now, really since the I would say Woodrow Wilson was one of the main ones, but it did start really in Teddy Roosevelt with a lot of the increasing government agencies and regulation and a lot of other stuff that was involved, like building up a increasing military going abroad. But there's been a huge increase in socialism in the United States for over 100 years. Okay, a lot of it started though with Woodrow Wilson. And Woodrow Wilson, if you're not familiar, I think there's an argument I think Woodrow Wilson, the debate is who is the worst president in the United States history. In my opinion, it's either Woodrow Wilson or FDR. Those were the two worst because they tried to absolutely destroy the Constitution and do a lot of other crazy stuff. So Woodrow Wilson, not only did he sign in the Federal Reserve Act, the central bank, he also signed in the permanent income tax, and he also basically forced an entire generation of American men to be killed in World War I. And, he went on a massive intervention tour. His Treaty of Versailles, which he helped push, and he tried to start the League of Nations, which was the precursor for the globalist, United Nations. So he tried to do a bunch of crazy stuff, Woodrow Wilson. And, that was really the massive increase in beginnings of socialism. And Wall Street claims to be apolitical, but a lot of the people on Wall Street now are mostly hardcore Democrat, and the truth is that Wall Street has really been funding a lot of socialism in a lot of other countries for years. They funded the Bolshevik Revolution because they thought they were going to get a central bank. At least a good amount of the financiers did. Prescott Bush funded, and him and some of his other buddies, that's George Herbert Walker Bush's father, I believe, when they were in Connecticut. He funded a lot of stuff in the Nazi government. He had investments there. So, and Nazism is National Socialism. So it's a version of fascism, but also, its technical name was National Socialism. It was different than the Soviet style of socialism. And I could just go on and on with the examples. FDR was the next great step for socialism in the United States. The stuff that FDR passed, a lot of it was totally unconstitutional. In fact, a lot of the stuff FDR was getting passed with the New Deal and so many other things was so unconstitutional. He wanted to basically drastically change the Supreme Court so they wouldn't get in his way. He wanted to pack the court. Harry Truman, who took over after FDR, Harry Truman, even after World War II was over, he wanted wage and price controls maintained. He wanted industries basically totally taken over by the federal government. So there is a long history, and it's not recent, it's been increasing for a very, very long time, of pro-socialism in the United States. Pro-big government people, anti-freedom, anti-any free market. Even John D. Rockefeller, and a lot of people aren't aware of this, John D. Rockefeller, after he made a lot of money with relatively free markets, he gave this quote saying he wanted to end competition, which is not something you would expect this giant capitalist to necessarily do. So he basically was the George Soros or Jeff Bezos of his era, and I'm going to make the comparison in a little bit, how basically Jeff Bezos is doing almost the exact same thing with a online company that the Standard Oil Trust did. And so John D. Rockefeller, after he got rich in a low-tax, relatively free market system, he set up, he started funding social programs, government agencies, blocking competition, rules, regulations, high taxes. So, and the thing about the Standard Oil Trust is they never really paid any taxes. The way it was set up was he could bankrupt or buy out his competition, and he could gain more market share, but on paper, he didn't have to pay taxes. It was like it was essentially a revenue-only generation company, and so revenues and expenses were almost matching. And that's what the Standard Oil Trust was. It was not it was intentionally done through accounting tricks, so he would not have to pay any paper profits or taxes. And that's essentially what Jeff Bezos has done with the same way online digitally with Amazon. He set up basically an online version for e-commerce to bankrupt a lot of other companies and, easily grow his company and buy out companies and destroy entrepreneurship and eliminate competition. He's basically set up another version of the Standard Oil Trust. So again, not free market, not capitalism. Wow, there's a real racist person in the comment section. You guys will see it. I'm in shock. My friends, I showed one of that guy's comments, and they thought that guy's a paid troll from like Wall Street or like one of the intelligence agencies. I can't believe you wrote that, dude. You can't be a real person. So anyway, socialism in the United States. A lot of it started in the early 1900s during the Progressive Era and increased and increased and increased. FDR was the next move forward after Woodrow Wilson. FDR increased socialism a lot. There was a lot of government agencies. There was a lot of rules and regulations. Military spending, which is big government control, never really dropped after that. So even though the private sector in the United States was producing profits, and this is the key to how big government and totalitarian government can survive, it has to have some type of private sector producing profits. So whether that's fascism and large government controls, and that's something else I wanted to talk about. So people were bringing up in the comment section too, under the Jose Nino interview about corporations, you know, how corporations, it's all how capitalism is bad because of corporations. Well, first of all, if you study the history of corporations, corporations actually started basically at or before the Industrial Revolution. They were initially chartered by a king or a monarch, okay? So if you want to go back in history, you have like the South Sea Corporation, the Dutch East India Company, you have the Hudson Bay Corporation, and basically the king or the monarch gave like these companies, and these companies didn't want competition. They were chartered by the king. They were protected by the king's army in some instances. They were given the ability to make profits, but they were fully backed by big government. So if you tried to compete, like I'll give you an example of this. So there's a Netflix show that you can watch called Frontier with Jason Momoa, and that's an interesting historical show. It's obviously fiction, but there's some truth in there, and that's about the Hudson Bay Company. So the Hudson Bay Company was granted by the King of England exclusive monopoly rights of the fur trade in Canada and the East Coast, the Eastern Seaboard. And so if you were competing, if you were a fur trapper or trading their furs, you were basically committing treason against the King of England. Okay? And so corporations were not something that was created by the free market. That's the point I want to make. Corporations preceded the free market. Corporations have always been crony. They have always been connected to big government. They have always been protected by big government in a lot of instances. Now, obviously, if you're a little entrepreneur or a small business owner, you're basically forced to start an LLC or a corporation now. But the initial thing of corporations and the large corporations is that they've always received some type of special privilege from big government. Okay? So to say that because there's corporations, that means all capitalism is bad is totally incorrect. And socialism, I'm going to be, to prove you guys wrong that we're saying how good socialism is, I'm going to be booking people who actually escaped socialism for interviews. So I just reached out to Yuri Maltsev. He was very high up in the Soviet Economic Planning Department for a very long time. And he escaped the Soviet Union, and he's now affiliated with the Mises Institute. He teaches economics here in the United States. And he was just, if you go back and look up his interviews either on the Mises Institute website or elsewhere, just some of the stories he's saying. And some of you guys were saying that the Soviet Union had better consumer products, that, you know, it's all the United States' fault why Venezuela is collapsing, that Hugo Chavez and Maduro don't deserve any of the blame, is just totally ridiculous, okay? It's just totally ridiculous. Okay, so I will be interviewing people who are survivors of socialism, who escaped socialism, and can actually tell you that stuff. My last 6 months here, doing this free podcast, I will make sure to sprinkle in now survivors of socialism, because some of the comments there were just, I was in shock at some of them. So I'm going to be reaching out to people that escaped, you know, Venezuela, that escaped the Soviet Union, that escaped socialist countries in Eastern Europe, and, you know, just ask them about their living experiences. You know, what it was like living in a socialist country. For example, Yuri Maltsev mentioned in one of his speeches that he was risking prison time even owning a Friedrich Hayek economics book like Road to Serfdom. So for him owning the book, he was risking prison time. And for him reading the book, he was risking prison time. And he was high up in the economics planning department. So I could go on and on about some stories, but I am conversing behind the scenes with friends who have survived or escaped socialism, and because of what happened in the comment section, and because of the surveys of young people and middle-aged people and old people in the United States who prefer socialism, I think it's fair that I try to counter that by interviewing people who basically are experts. Their opinion is more valid than mine about socialism because they lived through it. They survived it. So basically, lumping corporations and saying because corporations are bad, that means capitalism is bad is incorrect. Okay, corporations actually have predated a lot of industrialization and free markets. Okay, corporations initially were chartered by the big government, by the monarchy, by the king, and they've always had special privileges, especially the large ones. And really, that's no different now. Look at the large corporations in a lot of industries. There's normally only 3 or 4 large corporations in every major industry, and the government regulators protect them. They go out of their way. They bend over backwards. I mean, how many executives, even if they commit accounting fraud or other felonies, how many of those guys actually go to jail? Oh my God, the comments on this guy in the comment section. Unbelievable. Okay, I wanted to bring up the Nordic model too. So another argument that was brought up in the comment section under the Jose Nino interview was the Nordic model is flourishing in Sweden, Norway, etc. Well, let's see how well Norway does when the oil price doesn't stay high for a while. We'll see. I don't think the Norwegian economy is going to be that good. So if the oil price doesn't rally, I think Norway's going to have some problems, some real big problems. Sweden, which is part of that Norwegian model, the Nordic model, the Scandinavian model of democratic socialism that Bernie Sanders is talking about, Sweden's not doing very well right now. Okay, if you only look at the mainstream media, the news articles, you're not going to find out the truth. There's tons of really crazy news stories coming out of Sweden. In fact, for me, probably doing this podcast, if I lived in Sweden, they could throw me in jail. There is no freedom of speech. People who do self-defense to protect themselves are going to jail. It's really cartoonish there. It's totally full Orwellian. 100% politically correct. And if you don't abide by those rules, you go to jail. So basically, for socialism to continue at a long period of time, there has to be capital to steal. There has to be private sector profits. That's the only way any sizable amount of socialism can last. You have that in Singapore now. Singapore has a successful private sector, but I believe about 10% of GDP is used for poor people in Singapore and public housing. But if you did not have a successful private sector in Singapore with profits, with capital, with assets, you could not get away with that. Okay? And Jose brought this up. Eventually, the goose gets killed. Look what happened in Venezuela. Eventually, the goose gets killed. But no, there's idiots in the comment section saying that the United States is to blame for everything. No, it's your corrupt politicians who are stealing as much money as they can and buying 20 luxury homes in Miami all cash. And honestly, that is what's happening with a lot of the Venezuelan elites. The Venezuelan political elites and a lot of the military leaders, they've stolen so much from Venezuela that they've bought luxury homes in Miami and elsewhere. Lots of money has been stolen out of the country. There's been news stories recently that the Venezuelan elites have been able, despite the hyperinflation in the Bolivar, they've been able to get foreign currency exchange and get to dollars and euros and save their own asses to buy assets. But yes, blame the United States for everything. Should I block this guy? The comments are getting really ridiculous. Okay, let me check my notes again. Oh, and you know, a lot of the socialism increases in the United States, I wanted to bring this up. So they were mostly Democrat politicians, but you also have President Richard Nixon, which put in wage and price controls. President Richard Nixon also put in a bunch of new permanent government agencies that have not been disbanded, that their budgets have grown rapidly. So it's a permanent bureaucracy class. And that's really what starts to choke off the private sector. Is not only is there corruption and high taxes and rules and regulations, is the permanent bureaucracy class that starts to hurt the private sector, and those profits start to stop. So you haven't seen that in the US yet, and that's why the US can still get away with a lot of the stuff it's gotten away with. But Europe is not so lucky. Europe things are starting to really, there's total implosion in Europe in a lot of different ways. I don't want to go into all the details. So you have the European banks. You have all these, a lot of these European countries in the European Union cannot afford all the welfare programs. You have people revolting over tax increases. I've seen some of the videos with the people interviewed on the streets in Paris by Luke Rudkowski of We Are Change and some of the other interviews, and why the protests are really occurring that the mainstream media isn't covering. The other thing I wanted to bring up, and Stefan Molyneux actually covered this, is he did about a 3-hour special in 2017 on McCarthyism. And so McCarthy actually had, the way he went about, Joseph McCarthy, he was a Republican, he was initially a Democrat and then switched to Republican, but the way he went about trying to uncover all the communist or socialist spies, Soviet spies inside the U.S. government was wrong, but he actually had legit information. And so there's been a lot of declassified documents now that are from the U.S. government over the last like 80 years that are finally been declassified. And basically the Soviets before World War II had fully infiltrated, basically they had spies and agents in almost every single thing you can think of, a lot of them inside the U.S. government. That was steering it towards anti-freedom, anti-free market, anti-liberty, stuff like that. So, you know, more towards more taxes, more rules, more regulation. That was intentionally like intervening and disrupting the U.S. economy and stuff like that. There were Soviets inside the U.S. military. The evidence is just overwhelming. There's tons of reports on this now. There was even a book I read that went through declassified documents about 3 or 4 years ago, and there's actually a television show based on this, or well, it was on FX called The Americans, and the declassified document said that there was a bunch of like deep cover Soviet spies, like Directorate S, that were living right outside of Washington D.C. and were like stealing information from a lot of different government agencies, and no one ever caught them. So to say that the U.S. is too capitalist or too free market and not socialist enough, you haven't studied history, I would say. And yes, the U.S. unfortunately is headed towards more socialism, but to say it's not socialist enough is incorrect, because the evidence is there and you can go and do your own research and due diligence that this has been increasing massive amounts of big government, rules, regulation, taxes, and socialism, welfare, warfare state, other stuff in the U.S. for 100 years. And the Republicans, unfortunately, a lot of them either didn't care or didn't try hard enough to stop it. So the Democrats, a lot of these Democrats, the moderate Democrats weren't necessarily in favor of this, but the radicals were. And the Republicans, unfortunately, did not really try very hard to stop this. Yes, and you know, all this socialism, this is why you're seeing problems in Europe. The US has been bailing out Europe since 2008, and Europe is further along on that socialism arc than the US is. The US has a healthier private sector, and the private sector is still large enough relative to a lot of the other government parts of the economy where it's not as bad. Plus, the US has the world's reserve currency. But Europe is imploding because Europe has, their private sector is not healthy enough. And we've had listeners talk about this. You know, when I brought up that our listeners to this podcast in Europe should be more entrepreneurial, and they tell me, Jason, there's just too many taxes, there's too many rules and regulations to be an entrepreneur in the United Kingdom or other parts of Europe. And I was shocked to hear that from some instances, but I've also heard from friends that in Italy, like if you're going to start like a small little retail shop or restaurant in Italy, I think there's like 5 different government agencies or bureaucrats you have to bribe just to get a credit card machine. I mean, that type of corruption and or bureaucracy to deal with just to get a credit card machine in the United States, like, to put things in perspective, it's if you opened up your own store here in the US, even you could get a Square payment system. You can get payments with credit cards from your mobile phone. There's a lot of options. A credit card company, to get a credit card machine, it would be way easier. Abu, are you getting paid to do these posts? Are you getting paid per post? Okay, so I think I cover... Oh, one more thing I wanted to talk about. So, we're at a Bitcoin price now where I just saw this news story. So, over 800,000 Bitcoin miners have shut down since mid-November amid declines in price and hash rate across the network, according to the 3rd largest mining pool. In an interview with CoinDesk, Mao Shixing, I think I said that right, founder of F2 Pool, said his firm's estimate takes into account the total network hash rate drop and the average hash power of older mining machines that are having a hard time generating profits. So it looks like we're pretty close to Bitcoin capitulation right now. Bitcoin could go lower, but a lot of miners have gone bankrupt. You see, if you go on eBay, I think there's like tons of Bitcoin mining equipment like ASICs and others that are selling for enormous discounts. And there's pictures and video all over the internet of like Chinese Bitcoin miners that are like smashing their equipment or just like having it hauled away to the junkyard or selling it for scrap or whatever, or selling it for pennies on the dollar. So that is an enormous amount of bankruptcies in a very short amount of time. So if you were looking at a normal commodity market like gold or silver, oil, and natural gas, that many bankruptcies would normally be a sign of capitulation. Bitcoin is a new market, so I'm not quite sure if that's going to hold. But from what my listeners have explained to me, though, that, and I've read a number of articles recently saying too, that the larger Bitcoin miners that didn't massively leverage their balance sheets with too much debt, they actually can increase their profits in this. So the Bitcoin mining algorithm will actually allow for profitability. It will change, but the hash rate dropping will make the network less secure. So the larger Bitcoin miners can actually get more market share and become more profitable with this. And, you know, the increasing in the market share for a lot of Bitcoin miners, that does worry me about a 51% attack. But I'm sure some of the listeners that know Bitcoin more than me could argue that better than me, whether that means anything or not. Yeah, so Wall Street has been a lot of people on Wall Street who are hardcore Democrat now, but the history of Wall Street with socialism is actually very interesting. A lot of people on Wall Street who may not be political, they've actually funded crony socialism. I'm not saying all of them do that, but you know, some of the JP Morgans and some of those other guys, they were interested in funding the Bolshevik Revolution and others. Okay, so I think we're done with the notes part, and we could just answer some listener questions and answers. But my main points, though, are that I don't think you can lump free markets and capitalism with corporations, because corporations use the government for rules, regulation, higher taxes, barriers of entry. They're friends with the regulators. If you're an entrepreneur or small business owner, the corporations are normally historically in bed with the government. A lot of them even had chartered monopolies or oligopolies protected by the king or the monarch, okay? So to say that corporations are synonymous with all forms of free markets and capitalism is incorrect. And I think I did a halfway decent job of explaining that Jeff Bezos basically is going to be this generation's John D. Rockefeller. because on paper, Amazon actually doesn't generate a lot of free cash flow and hardly makes a profit at all, and they pay very little taxes. They only really collect sales taxes. They don't pay a lot of, Amazon does not pay a lot of taxes. So Amazon is essentially an e-commerce online digital version of the Standard Oil Trust, which is not free market and not capitalist at all. And not benefiting a whole, well, it's benefiting some consumers temporarily with cheap goods, but a lot of other people, small business owners and other entrepreneurs are not benefiting from Amazon. Okay, so let me get to listener questions. Questions and comments. Blah Blecka. There's a rally coming. Why do you think the rally is coming? Is it fundamental or is it just people closing out their shorts? Because there has to be some type of fundamental catalyst. There has to be the central banks, either the two main things, for me at least, that would bring a stock market rally are the central banks either reverse course, which is in the short term probably not likely considering the news from the European Central Bank with the reduction in their QE program and how the Fed may hike rates in the next couple days. Or that there's a major announcement on the US versus China trade deal. I do not see that likely either. There's actually a lot of YouTube channels. I've been researching this thanks to you guys because you told me to look up the legitimately honest China YouTube channels like China Uncensored and Serpensa. And I've been seeing over the last couple years, even before President Trump won the election in 2016, that in China there was a rising xenophobia in China and that there's an increasing... China's always had a history of nationalism and pro-China, but it's increasing even more. And so a lot of American business owners are leaving as fast as they can China. Which, by the way, guys, this is not financial advice. I think Starbucks and Bill Ackman, I think they're going to be caught with their pants down. I think Bill Ackman is going to be caught with his pants down on that trade because he just announced he's long Starbucks because Starbucks is going to be expanding rapidly in China. Well, from some of those videos, there's already a ton of coffee shops in China, and Starbucks is a big American brand, and with growing, xenophobia and anti-American Chinese nationalism in mainland China, that doesn't seem like it's the smartest idea for Starbucks to be massively expanding throughout China. And if you look at the long-term Starbucks chart, it looks like there's like a double or triple top forming. It's already gapped down from 70, I think, into the mid-50s, and there's not a lot of support on that long-term Starbucks chart. It could easily drop, could cut in half in the next 6 to 12 months. So if I was this is not financial advice, it's just hypothetical. If I was managing money, I would probably be looking at buying puts out of money on Starbucks. Maybe give myself 6 months to a year. I think Bill Ackman may be caught with his pants down on that one. Bill Ackman's a smart guy, made a lot of money, probably make more money than I'll ever make. But sometimes because of his Ivy League background, straight to Wall Street, he doesn't see how things are happening in the real world on Main Street for the little guy. So if he had watched some YouTube videos from some of those guys and seen how like American brands and American people are not being treated too well in China anymore, he may have realized that, betting on Starbucks for them to execute their Chinese expansion plan was probably not the best idea now. Scott D's, crude slaughtered today, where's the bottom? Well, we haven't seen enough bankruptcies yet, Scott. So if crude goes lower, we'll probably, I explained this earlier in the interview, excuse me, I explained this earlier in the live show, talking for 48 minutes now, getting tongue-tied, haven't had many water breaks. Eventually, crude will have to bottom. Now, historically speaking, over the last like 20 or 30 years, normally, even at these low oil prices, the OPEC countries, the national oil producers, will cheat and will continue to produce. And if you're a private sector oil producer, if you have a lot of debt on your balance sheet and you have hedges, you have to keep producing oil. You cannot cut production. So as long as that remains true, you'll probably have a supply overhang in the oil market. There also has to be some type of catalyst to rally oil price. So if there's a huge drawdown in inventories, that can move the oil price up. But in general, Scott, there's a lot of evidence that the global economy is slowing down. There's immense problems in Europe. As I've highlighted now ad nausea for the last like year and a half, 2 years, the three largest problems are Europe, with the European banks, European governments with their bonds and stuff, emerging markets with the dollar rally, and dollar-denominated debt, and then also corporate bonds. So those things, unless those things are solved, there's going to be big overhang problems with the global economy. Now, at a certain point, though, Scott, the producers can't make any money. So I haven't seen any signs yet that massive amounts of supply has been cut. So in the short term, we could go a little bit lower in oil. There are some interesting plays to go long oil, but I would be careful here. Because if you don't research the balance sheet or the production costs of the oil producer, could get in trouble. Because the last oil bust there was about 3 or 4 years ago, when there was another big oil bust, when oil went, I think, from 90 or 100, when the shale production was starting to come online a lot, and it dropped down to like 35, you had Linde Energy and the other oil-producing master limited partnerships that had very leveraged balance sheets, but said that they were hedged oil at a higher oil price for 3 or 4 years. They still ended up going bankrupt. Even though they said that, we're hedged at, when the oil price was at 35 or 40 for a while, they were saying how they're hedged at $60 a barrel oil, the hedges rolled off. And they had too much debt, and their bankers didn't want to work with them. And they couldn't get refinancing, and their share prices had collapsed, so they couldn't sell any more equity. This is kind of the problem that some of the gold and silver miners are facing too. Now, gold and silver miners have had a rally. Gold is actually holding up pretty good, despite the dollar rally. Gold's at $12.48, almost at $12.50. So, Bleka, to answer your question, I don't think there's a rally coming yet. I haven't seen any evidence. There has to be also, maybe, there has to be like a retail company like Amazon or Best Buy, one of the bigger ones, that announces blowout numbers for Christmas. Haven't seen that either yet. Now, Olive Garden did, Darden Restaurants for Restaurants did announce a big number, and that did get some of the shorts in the restaurants worried, and I think a lot of the rally and a lot of the bad restaurant stocks that have really bad fundamentals was short covering rally, but I don't think a lot of the restaurants are going to post really good fundamentals going forward, and I think the Darden rally over the next couple quarters will probably peter out as well. Oh, and the reason I mention that is because David Rosenberg on his Twitter feed, he talked about how in the government economic data, and they get to look at, I think, like credit card receipts and stuff like that, that the restaurant demand has actually fallen the most it has over the last month or two in about 25 years. So people have started to cut back drastically eating out in the last month or two. And the drop in people going out to eat in the United States is the biggest drop in only a month or two span in like 25 years. So we'll see if that government economic data, if that holds true with the real companies, what they're reporting, if it matches. Because sometimes the government data that's being reported doesn't match what the companies are saying. So we'll see. In general, I'm not a huge believer in government data. A lot of it's manipulated. But that one may be accurate. We'll see. Hello, Mark. If the central banks reverse course and they start QE again, you could have a stock market rally. But in the near future, with the European Central Bank and the Fed, I really don't see that. Yes, we need to end the Fed. But a lot of, even Republicans, Mark, most Republicans are not in favor of ending the Fed. They think we're silly. If you don't believe me, watch the interview Danielle DiMartino Booth did over the weekend with Greg Hunter on USA Watchdog. She had no interest in any of the stuff Greg Hunter was saying. I think the Fed will start buying stocks soon and also bonds. Probably has to be another crisis first. It looks like the Fed is probably going to hike rates in the next couple days on their Fed meeting this week. And they may do at least one more rate hike. But eventually, as I've said this at length too recently, that they will break something. The evidence is just too apparent with the leading economic indicators and so many other things that a lot of industries, whether it's autos, housing, electronics are all starting to crack and break. Those industries are all either they're about to enter a recession or they're already in a recession. The Fed needs politicians on both sides of the aisle to basically agree to some type of crazy program like that, probably. And maybe President Trump's going to talk about firing Jerome J. Powell soon, because obviously he's going to be blaming the Fed for things. I'm going to interview Danielle DiMartino Booth on Friday. That's the plan as of right now. And I will ask her if Jerome J. Powell ignores Trump and continues to raise rates, if Trump can easily fire him. How are Exxon and Shell doing? Well, both of them have transitioned to more natural gas. The problem is that when Rex Tillerson was CEO of ExxonMobil a while ago, they started doing massive amounts of financial engineering. And basically, they were trying to get more, what's the right word, income investors to buy and hold ExxonMobil stock, and they were trying to make it comparable to a bond, like a bond substitute. The problem is with a large oil and natural gas producer, especially a vertically integrated one, they have so many different businesses, whether it's oil production, E&P, or refining, or their other business. Well, I think they sold their gas station businesses, but all those different businesses throughout the value chain that ExxonMobil owned were all very capital intensive. So they tried to, when Rex Tillerson was CEO, they tried to design an oil-producing company that would have smoother earnings. And they did this with financial engineering and share buybacks. And if the oil price dropped and their cash flow dropped, they would try to borrow with dividends to, borrow with debt to make up the difference and sometimes pay a dividend. And they were doing massive amounts of share buybacks even when the stock price is higher. So it hasn't gotten ExxonMobil in trouble yet. But if that continues, I would be very worried. How a oil and gas producer or a mining company should do business is they should add either production, quality, low-cost production, or quality, low-cost, long-life reserves, cheap, in the bear market part of the cycle. And so when things are crashing and the larger companies with the good balance sheet, they're supposed to go out and think long-term and do that. And really, a lot of companies in the oil and gas industry have not really done that. They've focused on maintaining their dividend and doing share buybacks rather than growing reserves, making sure that they can grow production at a low cost. So far, it hasn't nipped them in the bud yet. I know Jim Chanos a couple years ago was short Royal Dutch Shell, and they did drop. I'm not sure if he's still short those, though. But he did make a good profit, at least for a while. I think, in my opinion, I think Chevron's probably safer than Exxon and Royal Dutch Shell, though. Mark would rather take the pain now and cut spending and lower taxes rather than political kicking the can down the road. Yeah. The problem is no one else agrees with you. Most of the Republicans and Democrats in power in the federal government, in Congress, and the bureaucrats, they don't want that. So you're not, even though that would be the sound economic policy, we don't have sound economics now. We have the Trump supply side economics now, which is blowing out the budget deficits. So far, it hasn't hurt the dollar yet. At some point, it will. But the market, as I said in my last couple live streams, the market is far more focused on Europe right now and emerging markets than it is on the U.S. And that is giving the U.S. more rope to hang itself with. So in the long term, the U.S. is being given more rope to hang itself with. In the short term, this makes, on a relative basis, the U.S. safer with the world reserve currency, more liquid markets, capital retreating here. All these foreign corporations, foreign banks, foreign governments owing dollar-denominated debt. That makes the U.S., on a relative basis, more likely to attract capital, especially with the Fed continuing to rate hike, because so much debt is still negative. negative interest rates, excuse me. There's over $9 trillion of negative interest rate debt. A lot of it's in Europe. So on a relative basis, the U.S. is more attractive now. U.S. bond markets are more attractive. But the U.S. is being given more rope to hang itself with. And in the future, years from now, there will be a day of reckoning. I don't know when, though. Because, like I said, the three most likely parts of the next crisis are, except for corporate bonds, are not really in the U.S. It's going to be worse than 1929. Well, Oliver, you know, if the central banks were restrained, I would agree with you. But I think the central banks are going to be able to, the politicians and central banks will probably change the rules. So there may be 6 months to 12 months where things are as bad or worse than 1929. But in the environment we're in, where a lot of Americans favor socialism and favor intervention and want the government to do something, that will allow the central bank and the government to get away with a lot. Change the rules, almost do whatever. There's actually, I wanted to bring this up, there's actually another, because I know you guys like my recommendations for movies and stuff like that that are related to some of these time periods. So I brought up Frontier already on Netflix with the Hudson Bay Corporation and how that was basically a government-protected monopoly chartered corporation before the Industrial Revolution. There was no, free markets or capitalism basically back then, or not anything to the modern level that we have now. But the other movie I just saw on Netflix is very interesting. It was in English subtitles, but in Spanish. It was called Gun City, and it was about Barcelona prior to their civil war, the Spanish Civil War in 1920. So it was like basically a military dictatorship after the president had been assassinated versus they called them anarchists, like the protesters, but it was really the socialists, because it was people like fighting for workers' rights and higher wages. And it was really interesting because the movie, it was a very entertaining movie. It actually surprised me. But, early in the movie, like one of the crooked cops that was in Barcelona, he was like complaining how in the city of Barcelona in 1 year there was 600 protests. And you know what? I was thinking like, damn, that's like how things are now. So like I said on previous live streams, like it's taken about 80 to 100 years for a lot of the painful lessons of past generations and past people in history to unlearn. Excuse me. It's taken about 80 to 100 years of people now to unlearn the painful lessons of people from past generations. So all the stuff that led up to World War II, like socialism and fascism and totalitarian government and all that stuff that was escalating in the 1920s and 30s, a lot of those things were unlearned over the last like 3 or 4 decades, and they've escalated to this point now. And if another book recommendation, Neil Howe, Fourth Turning. So you may want to read that. I don't agree with everything in there. Neil Howe actually lives around me. I've had lunch with him about a handful of times. He's an interesting guy. He's actually a limited government guy, but he doesn't like a lot of the stuff about libertarians. It's kind of weird. He tried to pay me like a really low sum of money to work for him, like just per article. He didn't want to hire me full-time. It was weird. He wanted me to write a bunch of articles for him but not be a full-time employee. But anyway, Fourth Turning, Neil Howe. That's talking basically about an 80-year generational cycle, breaking it up into like 20 different generational cycles. Okay, guys. Well, I am tired. I'm going to go relax. And everyone have a nice night. And I'm going to work on getting those interviews out. Hopefully they're high-quality audio interviews later this week. And early Merry Christmas to everyone next week, and a Happy New Year.